Welcome to Real Money Talks. Real strategies from the moneymakers and the world changers that you can use to make millions, keep those millions, multiply your wealth, and build your team. Here's your host, author of 5 New York Times bestsellers, money expert on Dr. Phil, CNN, CNBC, The Street TV, Fox News, and The View, Laurel Langmeyer.
Hi, this is Laurel, and welcome back to Laurel's Real Money Talks, the podcast that talks about how to make money, how to keep it, how to invest it, and why use a team. We've been making millionaires now for over 2 decades, the longest standing community making millionaires. So again, you podcast listeners, welcome back. And those of you that are listening from other places, from our Big Table community, just from any of our groups that are out there that need a mortgage. So today I have with me Ken Starks. So Ken, welcome.
Thanks, Laurel. It's good to be here.
Good to have you.
We've been doing this, since 2003, I think, you and I?
Yep. So long time. Ken has been in our Big Table in our community, specializes in mortgage, and talk a little bit about why now. We have an urgency. We have rates that are extraordinary.
Well, oh my gosh. Well, rates are absolutely extraordinary, beyond all-time lows. You know, in 2012, we never thought we'd see a 2% 30-year fixed. Now we're seeing even 30-year fixed in the high 1% range, depending on what you're doing. So rates are beyond all-time lows. The Federal Reserve is right now stimulating the purchase of mortgage-backed securities, which is what's providing the liquidity, the supply of money into bonds, making rates artificially low. Of course, with the current economy, don't know how long that will last. We have a hostile political environment that could change things. Employment numbers could change things. But right now, rates are on fire.
And so just make it easy. People want to just explore. That's what I always say is don't make the decision yourself, at least to reach out to you. If you want to reach out to Ken, again, this is all kind of driven through our AskLaurel.com platform, which is ASKLORAL. You just put AskLaurel.com/mortgage, and you will immediately get into Ken's pipeline for an appointment. So let's just get that out of the way. So when people are wondering, what are some of the initial questions you think you should be involved in? Because I think too many people try to decide by themselves and don't have an expert.
Yeah, no. So in the community, I see a variety of types of people. People who are straddling, they're going from W-2 to building a business. And if you're going to be financing any real estate, you want to do that before you finish up your W-2 job. So that's one time that's super critical. The timing of that's really critical. At the same time, it's January 2021, and people are starting to structure their taxes and prepare to file. If you're going to be financing real estate, now is the time to structure those taxes. Have me help you structure those taxes with your CPA, whether it's Weldon or Warren or others. We work hand in hand very often with your CPAs to make sure that you can qualify for the mortgage that you want. Because once you file your taxes, yes, you can amend, but that's a whole hullabaloo. So properly filing them so that you can qualify for what you want is key. So that's 2 times where I think it's really important. At the same time, sometimes people get stuck and they need creative loan programs. Maybe they have already filed taxes and on paper they don't make a lot of money and they need something creative. Creativity is back in the marketplace today. So that's another time. And, we're always glad to give a second look to compare because we run a lean operation. A lot of the, big branded names that you see, they're big and branded because they have deep fat margins that allow them to do all that marketing. So, sometimes people will go back to their current loan servicer to refinance thinking that, they've already got my stuff, which isn't true and doesn't matter anyway. And, they'll give me a great deal. Also not true. Typically, it's a worse deal. So glad to give a second look at anything you've been given, any loan estimate that you've been given, to compare and compete. And typically, because we run a lean overhead, not big, sexy offices, and we can beat anything that's put in front of us. And so those are the kind of the 4 big reasons that I see. Right now, equity's high. People's equity amounts are high because of this recent push in values, and rates are stupid low. So, we've got clients that are taking cash out to invest, and they're having the same or lesser payment than they have on their current mortgage that they maybe did 2 years ago or a year ago because rates are that low.
And so what about those folks, though, with high equities, if real estate markets drop? Are they overleveraged? Let me talk a little bit about that. or the risk of that?
It's kind of hard to over leverage these days. In days gone by when we can do 80-20 combos, 100% cash out refis, that's not possible today. On a first mortgage, the highest any mortgage product will go is 80% of your value on a cash out loan. So it's hard to over leverage. We do have products that would do a second mortgage up to 90. They require high credit and they're more restrictive. So, they expect you to be smarter with your money, but it's really difficult to get over leveraged because of this, the state of our market. Most people cash out to 80% if they're cashing out. But that's also about money rules, right? Like Randy says, it's about money rules in terms of deciding what is right for you. Your age, your stage of life, your risk tolerances, where you are in that process. So really following those money rules is key.
Absolutely. So what do you do different? What makes it better, different to work with you?
Sure. So we're very unique. The company where my license exists allows us to openly shop lenders for the best possible rates and fees for your scenario. So for instance, on one given day, lenders will take up rates because they want to slow down the flow of loans, right? Or perhaps they've got some problems on their back end that their capital stack is off or whatever. So that's fine. When you go to, just to say, Rocket, you buy Rocket rates. That's all you have the option to buy, or Quicken. But if Quicken's rates are high on a given day, we can certainly go to any number of other lenders to place your loan. And you, as an individual consumer, wouldn't have a way to know. So that's thing one, that we broker, and we broker in all 50 states. So there's really not a mortgage problem that we can't solve. In the most recent market changes, you might be familiar with the term an overlay, a guideline overlay. During COVID, guideline overlays became extremely common, and people would hear rumor that said, minimum credit score is up to 680. No. Minimum credit scores for FHA and conventional loans have never changed. Individual lenders have applied what we call overlays on top of the Fannie, Freddie, and FHA minimums. So we have not suffered those problems because of the way we're structured. So, and even if we did, we could switch from lender A to lender B. So a lot of people hear myths like that and think that it's industry-wide because individuals or companies put out press releases or information that's misleading. Yeah. So we don't run into those problems. At the same time, today's non-QM or non-qualified mortgage market is very robust with a variety of types of alternative loans that have higher interest rates but are deal makers and get deals done. And so the ability to do those in all 50 states as well. And then, we really specialize. We understand tax returns. We know how to work with your CPAs. We understand the, uniquenesses that individuals in the community have with multiple properties, multiple entities, all that kind of stuff. So that's what makes us different and what we really specialize in.
All right. So let's go back a little bit. You and I have known each other almost 2 decades. Talk a little bit more about...
Literally 2 decades. 2 decades.
I know. Well, it's 'cause my son's been that old. So Talk a little bit about your background. And again, I think that's also what makes you uniquely qualified. You've lived through 2008, 9, 10. You have been in this community a long time, and just share that.
Yeah. Well, I would give a little bit even farther back. I think part of what helps me be effective in the mortgage business is the fact that I went to art school. I see it as pieces. I see disparate pieces in people's loans and figure out how to put them together in the way that works. So, after 9/11, I got into the mortgage business. I was working in real estate previously in a real estate related trade show. But after 9/11, I got into the mortgage business. That's when you and I met in 2002. And, for years, I was the number one salesperson for the nation's third largest subprime company, helping people, a lot of investors, a lot of different creative programs. And then, of course, the market changed, right? Along the time, I've done a lot of other work, flipped a lot of houses, 80 odd houses. Of course, the credit book that we wrote and published in the community back then. And then back in this current incarnation of, the mortgage business for the last 9 years, I've been originating loans and been around every block there is to imagine and know how to do a dance with an underwriter and show them what they want to understand and what they want to see and how to avoid the pitfalls that can come up, and have been in the top 200 of all lenders in the country 5 years of that 19-year career. So not by company, but by all originators. So done all sides of real estate. There's not really a side that I don't understand, from title escrow, agents, different types of deal structures, different end goals in mind, different financing vehicles, and why does a short-term loan make sense in certain scenarios? And when do you want to spend money to buy your rate down? And when does it not make sense? And where does it make sense to take your rate up to, get a credit towards your closing costs? All of those things come up when you're really trying to develop a mortgage strategy that works for whatever your end goal is. So yeah. I think that's the benefit of the 19 years of up, down, and every other way in this business.
Absolutely. So you mentioned a few things, like let's talk about some of the pitfalls and helping people avoid them. What are some of the biggest pitfalls, obvious pitfalls in your opinion that happen while somebody's getting a mortgage?
Yeah. So, right now, forbearance is a hot topic. If you took forbearance, you better be out of it by the time you're ready to do a new loan. And if you're doing a jumbo or a non-prime loan, you want that forbearance to be completely invisible because that's considered delinquency. That's certainly a very, very current one. A recurring pitfall that I see is entrepreneur people like, I want to leave my job. I'm going to go become a self-employed contractor and do whatever I'm going to do. That's no man's land. Right now, the guideline is Fannie Mae allows for 1 full year of self-employment before they'll do a loan. I've heard that from multiple people recently where they just didn't plan properly and or put their taxes together correctly to be able to make that exit, right? And the other thing is then how their taxes are prepared. I do see folks that, have missed opportunities in their taxes because they didn't catch depreciation where they could have, and instead they expense stuff. Once expenses are recorded, expenses are the Bible, so to speak. They are there in stone. Depreciation is your friend as an entrepreneur because it allows you to qualify still for what you want. On my side of the world, depreciation comes back to you dollar for dollar. So that's certainly a pitfall in the tax advice that people receive. Sometimes I see other credit. People will extend themselves, get new credit, and then extend themselves to, high balances on new credit. That's, I think of your credit like a tree, and that's like taking 2 axes to your tree. New credit, high balances, that can easily sway a credit report 40, 50 points. And if they have an oopsie and get a late payment, that'll be another 50 points. So those are probably the biggest types of pitfalls that I see. Sometimes mortgages are scary to people. They're like, what does this all mean? And nobody's going to judge you. We've been through all of it. I've seen bankruptcies, foreclosures, lived through and around all of it for 20 years. And, talking about it and getting professional help, a great team, both in the office and a team of resources, like Eileen to help fix people's credit stuff. So there's really not a situation that we can't talk about and develop a plan through. And in some cases, get creative around financial friends to help you rebuild stuff if need be.
Yeah, absolutely. So let's talk a little bit more about the current market. What's interesting is you said the forbearance was kind of a red flag, but I was there, daily, hours and hours a day when March hit and COVID hit. And all of those little nuances of, what is the forbearance? Even like tenants not paying rent. Anything around the mortgage and payment space was, I think, very casually, I could go out on a limb and say irresponsibly handled. The details, yes, the fine, 0000 font was out there, but I don't think a lot of people realize. So kind of bring us to the current market conditions around that.
Yeah, I would tell you, I recently had an individual buying a home in San Clemente. They were doing a jumbo loan. This individual owns 4 other properties. His top line personal income is several $1 million a year, top line, right, on his personal tax return. And hey, you're going to give me free money, right? He took the bait, so to speak, and he didn't need the cash. He had $500,000-$600,000 in the bank, but took the bait of, that sounds like free money. I'll just not pay for a while. Well, guess what? That invalidated his ability to buy the home. You cannot have a loan in forbearance and close on a new mortgage. And it depends on the type of mortgage you're trying to do as to how long or what it has to look like in order to close it. So Fannie Mae, Freddie Mac, as long as you're up to date, you're cool. FHA, you're fine. Jumbo, if anything is on your report that says you were in forbearance, they consider that delinquency. So at most recent. So, and even non-prime, even non-prime, they consider delinquency. The non-prime and the private markets got really rumbled during COVID. And so the credit, in some cases, credit quality has had to come up for those doors to start opening again. So forbearance sounds sexy and easy. And if you need to take it, you need to take it. And there's no other way. Okay. But there are restrictions around new mortgages and forbearance for sure. And that also stands true for car loans. I've got a guy right now who had a unique situation, and the fact that he was in forbearance on his car loan was a problem.
All right. So then let's go broader, talk about other markets. Let's talk about where are you finding, like, is most of your market in California? As you know, we're working heavily in Boise, Kansas, Missouri, a lot of other markets. What are you seeing across the country as far as the real estate market and the mortgage trends?
I mean, we work in all 50, right? So I've currently got transactions in Florida, Idaho, Utah, Arizona, California, where I reside in Arizona, Texas, and agents across the country tell me the same thing. There is no inventory. Rates are, of course, amazingly low, which is stoking demand. I would even tell you, I've got an agent in South Orange County in the $10 to $30 million coastal property market. You would think those people are fleeing California because of their taxation. His comment to me was, for every one moving out, there's two that want to move in, even at that price point. And so in the more normalized markets, depending, that normal is a very broad term in Orange County, between, below $1 million and 1.3, 1.4, there's anywhere from 4 to 6 offers. Here in Arizona, there's easily 10, 15 because everybody's moving here. Idaho, very much the same way. Idaho is actually the number one state that people are moving to. The number one state in the entire country is Idaho. I think Arizona, we're number 2. I think Texas, number 3. That might have that reversed. But the situation is very similar across the country. There is no inventory to be bought. Builders have stepped up. I watched the builder permit reports. The publicly traded, they have to report how many starts they have. Of course, the counters report the starts for the private builders. But starts are up, but they are nowhere close to what they were in 2005. And the delivery rate of homes versus the supply of new homes is still here, and demand is still here. Let me see if I can put that there. So all the way around, demand is outpacing supply, even from new builds. Yep. They're not building as crazy as they were years ago, and they're not even getting permits that fast. So that's what most agents are saying in most markets. Even in older areas, like, I've got a deal in Harrisburg, Pennsylvania right now. Same thing.
Yep, I would agree. And we're building, as you know, the Kristovich family, our family, we can't keep up. In fact, in Boise alone, there's over 2,000 people waiting in line for homes to be built. So it can't be built fast enough. It can't be put together fast enough. So Ken, someone's out here listening. What's their first step with you? Obviously, go to asklaurel.com/mortgage. Then what? What's the process? I know you have an enormous team that helps create, world-class servicing. And again, those of you who've had bad mortgage experiences, just pick up the phone, have a call with Ken. Talk about step 1, they call you, and then what?
So, you're going to get one of my sales team, either myself, Donnie, Hope, Trevor, and we're going to, talk through the goals, what you're trying to accomplish, see where you are with credit, and figure out, wherever you might be with, with income qualifying, and come quickly back to you with the answer that matches your goal to, figure out, does an all-in-one home equity line of credit work? Is that what we want? To access capital, but then also to have the flexibility to only pay what we need or pay it off faster possibility. Does a really low, I wrote a 30-year fix today at 2.5% on an FHA loan on the refi. Does a really low long-term 30-year fix make sense? We have the ability to do reverse as well. That's not everybody's preferred mortgage vehicle, but for certain people, it fits. If you're later on in life and investing later, stopping the largest debt may free you up to achieve your goals. And so sometimes a reverse works. And so really understanding what it is that you're trying to accomplish. I talked one person out of a refinance today because he wasn't sure how long he was staying in the property. Not staying long term, we're not going to suggest that you do a refinance because it costs, an extra $2,000 into the deal. Doesn't, we're here to serve in a way that best helps your family and achieves your goals. And that's what you're going to get from myself and my team. And then as we go through the process, Monique stays with all of our clients through the process. And we have a couple on the back end that don't really interface too much with our clients. to make sure that you get your disclosure signed and your, conditions in so that we can get you cleared to close and on your way.
Awesome. So what have we not talked about that you would like to share with our audience?
Well, a lot of times people ask, crystal ball, right? What's the future look like? Hard to know, right? The politics and the Federal Reserve are highly involved in our markets right now, and they really have been for the last 10 years. The Federal Reserve is flat out said that we will be the buyer of last resort for all the mortgage-backed securities that you can produce. So Fannie Mae, Freddie Mac, and Ginnie Mae. And so that's going to keep rates low. However, we have a new presidency. We've got Democrats all across the board, and they're making sweepingly different policy changes, which could start to affect consumer confidence, could start to affect monetary value, could start to affect any number of things. So I tend to focus on what we have right now and make decisions from there. The house people, and again, these are the crystal ball questions that people always ask, that housing numbers are green lights for years. If we make sweeping changes to tax policy or jobs initiatives or different things like that, those could have a negative impact. But at the moment, we're having a lot of positive impact. So, I think that's a big one that a lot of people ask. What else? What else do people ask?
Obviously, you do a lot of investor loans as well.
Yep.
So people that want to use 401ks, let's get into the more, I'd say, sophisticated strategies on use of money. You handle those kind of investment strategies and projects as well.
Yep, we can. I have an individual buying doing a 1031 into a $3.5 million very high-end home that's going to be used as a studio. We're doing it on a stated income deal with no income qualifying, closing in an LLC. So that's considered an out-of-the-box product and a non-QM product. And it's a beautiful home, by the way. What would you expect for $3.5 million? Yeah, so really help people organize and structure their 1031s, their residential investment, as well as their commercial investments. Commercial investments a little bit different now, especially with vacancy being a little bit higher in retail and some office space and things like that. Because what happens naturally in our world is that when people have very complex finances, right, as an individual, then, once we understand those things, it's very easy then to layer into the commercial needs that they might have. So, a business owner that wants to now buy their building or, expand into another building or different things like that. Or yesterday I talked to a hotel owner in Santa Barbara. So all kinds of different folks and needs, but we can handle the commercial ones as well.
Awesome. Yeah, and I just thought of somebody I just wrote down that I need to get you in touch with, who is in California and making that decision whether to keep that property or not. So we'll be doing that. It's a dial away. So go to asklaurel.com/mortgage and ask questions, reset your financial, especially if you have equity. Then you've got more money to invest in, what I'm calling the greatest indiscriminate crash in our lifetime. There is so many markets that you can invest in. Already the real estate, the crypto markets have run, the real estate market's running. Businesses, though, buying a lot of these small businesses who need a cash investor, they need a capital partner, or they just need some brains as a partner. So I've been picking up a lot of different equities and shares of stock across the board. So all of you that are out there, pay attention, call Ken. And Ken, what would you tell people? Get off their lazy assets would be always what I say. What would be your last words of wisdom, my man?
One of my favorite Laurelisms is say yes and figure it out. Yeah. Right. So sometimes I get folks that are newer to the community and they're like, well, I really want to, or what about, or how do I say yes and figure it out? Right. And a lot of times that's what we help people do is figure out the how to get the money to go buy the franchise or get the money to do whatever they're doing. And so say yes and figure it out. That's always stuck with me. You've said it for years and I love it.
All right. Well, Ken, thank you. And again, those of you that are out listening on our podcast, this is Laurel's Real Money Talks. We'll be back next week with another expert, more in the money conversation, whether we're making it, keeping it, or investing it. Till then, be well.
Thanks for listening to the Real Money Talks podcast. Your host has been Laurel Langmeyer, author of 5 New York Times bestsellers, money expert on Dr. Phil, CNN, CNBC, The Street TV, Fox News, and The View. Want to learn more about off-Wall Street investing, tax strategies, and multi-million-dollar business strategies? Visit liveoutloud.com/podcast for past episodes, show notes, and resources. For some special wealth-building gifts only for Laurel's podcast listeners, visit liveoutloud.com/podcast gifts. Do you have a burning question for Laurel? Visit asklaurel.com to submit your question, and it may just be covered on a podcast episode. So stay tuned and be sure to subscribe to get new episodes every week.